Hello everyone, welcome to the Trendline Investor channel. So today in this video, I'm going to discuss some of the stocks I recommended in the past and how they performed and how you could have probably bought them, how you could have added them, or if the stop loss it, how you should have exited them. And in the second part of the video, I'm going to discuss Mark Minerveni's trend template of how he uses his trend template to filter out stocks for trading or for investments. Okay, so let's get started with today's video. And this is the first part of the video where I covered 4 stocks in 12th of March 2023. I covered HEG, Subros, MRPL, and ISGEC, which stop loss hit there. And I said we can see 50% returns in 6 months. That was the thumbnail. And we saw 2 stocks which already hit 55% and 1 stock hit 30%, right? So I'm going to show you individually how the stock did, and then we will come to the second part of this video. Okay, so starting off with first with HEG. So HEG, if you see, if you open HEG chart, you can also open it along with me in TradingView just to see how it did. So we covered this around the 12th of March, which was somewhere around here, right? So you can remove all of this. So 12th of March was a Friday, Sunday. Yes, we had release on Sunday. So here is when I covered it with a stop loss around 900. The stock did go down and the stock went high again, and then it went all the way up. The stock did not hit a stop loss. So in case you bought the stock on the 13th of March, which was a Monday. Now, how you could have probably taken advantage of this move down, right? Now, let's say you bought the stock for the first time on Monday. Let's say you're getting 5% of your overall portfolio and the stock went all the way down. Now, what you could have done is when the stock had a breakout here and the stock had a very strong green candle with volumes. Now, you see at this point, there was very good volumes on this day. The stock reversed. Now, first thing what you could have done is you could have increased your position size, and you could also turn this into a swing trade by keeping your stop loss around that point, right? You could have kept your stop loss there. It's a very tiny stop loss because the stop loss around 900, and this day the stock hit 918. So it was just a 2% stop in case you bought the stock somewhere here. Let's say even if you bought the stock at 960, it was hardly 5 to 6% of stop loss, and you could have turned this into a swing trade. So that's one way how you could have done it. You first buy a position here, and then when a reversal candle you see, then you buy the next position. Now the other way to handle this position is in case you're conservative, then you add your next position above this point, right? So your first buy could be here, and your next buy can be when you had a close above this point, right? Now that's the second technique how you could have bought. Now the first technique, you bought 5% here. You could also buy another 5% here on this day close. And the second technique, you buy a 5% here when on Monday, and you buy 5% when it closes above. Now this is more for conservative traders. And then the stock went all the way up. Now what you could have also done is the stock had a one-way move up, and then here the stock again had a major consolidation and we had a breakout. Now after this breakout, you should have ideally revised your stop loss to this point, and you wouldn't have been in any losses, right? You're basically, this trade is completely risk-free trade. And then now you wait for this stock to kind of consolidate and again head higher. But in case you just wanted to also do swing trade, you could have also bought the stock at this point over here when we had a nice close. So you could have just bought the stock on this day with the stop loss around that low candle, because if you see, this was all these candles were inside this candle, right? Now that's also one of the strategies that you could do, and you could have bought the stock here with the stop loss here and probably book profits on this day gap down or something like that, right? You can trade this in n number of ways. So that's the first stock that I covered. The second stock that I covered was Subros. By the way, HEG you can continue to hold if you're holding, but it's up to you if you want to book stop loss, if you want to book your profits. But I would continue to hold because I'm more of a position trader. Right now, the second stock I covered also was Subros. Now, Subros also moved up almost 50%. Now, the reason I covered Subros was because of this major trend reversal. Now, you know, I'm a fan of major trend line, major reversals from significant support zones. Now, this was a nice reversal on this day, and then we had it on this week, right? March 13th of week. Now, the reason I covered this on this week is because we had this nice wick around this point, very strong bullish candle here, like just like here, and then we had an inside week, and then I thought, okay, maybe we are heading higher. That's why I covered the stock. And now, if you zoom in, this was the day. Monday you could have bought this, and then we had a nice very long consolidation. And this is why I say don't go very big on your first position, because usually after you buy, there's a chance that the stock would consolidate like this, and then we had a breakout here. Now you could have also added more on this day, probably taken your 5% position size to 10% position size, and then you could have had this massive rally over here. Now that's one point of where you could have bought the stock. The second point where you could have bought the stock is this. Now remember, as a rule, you buy a stock, you add more to a stock after it has a minimum 5 days consolidation, right? For example, after this point, we had almost 2 months consolidation, almost 1 month consolidation here, and we had a breakout here, right? We had a close here. That's when you buy. But if you have just a 3 days consolidation, if you're a positional trader, I would not add more on this day here, right? So if you're a positional trader, wait for at least minimum 5 days consolidation. But if you're a swing trader, even consolidation like this, you can go ahead and add because you're very aggressive, and you can do that as well if you have time. By the way, the stock is up 50% and the stock is still an uptrend. Do not sell off. Do not sell off. Do not sell off, because we have a very amazing breakout, all-time high breakout here, and we are heading higher and higher and higher. Now this is a beautiful breakout, multi-year breakout. So do not sell the stock in quickly. If especially an investor try to hold on to the stock, you might get much higher returns. So the third stock I covered was MRPL, again on the 30th of June. Now here, this was a reversal setup. It was a beautiful reversal setup. Here, somewhere around here is when I saw this. Now the reason I covered this is because we had this beautiful trend line reversal, and on 13th of March I saw the setup, and I said, yeah, on this day is when I covered it after this candle close. But then again here, if you see, the markets were a little weak, the stock came all the way down, but it did not break the swing low. Now that's why I always say swing low is a very important inflection point in terms of stocks, because a swing low breaks, a structure breaks, and a new downtrend starts. So that's why your stop loss should always be swing low. If you keep here, somewhere here, you get stopped out eventually, right? So you could have bought the stock on the first day over here, and the next you could have added the stock somewhere around here, or even somewhere around this point here when the price crossed this point. And then you had multiple opportunities to pyramid. You could have pyramided the stock when we had a nice closing above this point. So we had the first time we had closing over this point, and then you could have probably also added the stock when we had again a cross above this point, right? Now, always try to mark your points of pyramid or points of entry. Always try to mark it in advance and keep it so that you're not biased, or you're not adding just because you see some random movements, right? Also, you have to decide if you want to add the stock after the day close or during the day. It doesn't matter how you add it. If your position size is big, then do not add during close. You might miss on a major moves like this, right? So again, MRPL is the third stock, which is 30% up, and the last stock I covered was ISGEC, heavy engineering. Now this stock hit our stop loss, and then it went all the way up. So our stop loss around 430 or 440 levels. I think it was somewhere around here, this point, and I covered the stock here. Stop loss was hit on this day, and then the stock went all the way up. Now in case the stop loss hits, you could also again re-enter the stock when we had a breakout over here, right, on this day. That's also one of the ways to do it, right? So these are the 4 stocks I covered. I'm sure you're learning, especially when I'm covering these stock videos here. I'm sure you're learning because it's important to analyze your past stock performance and understand what you can do right going forward, right? Now, these are the things that I covered. So let's move on to our next section for today, which is Mark Minerveni's trend template. That's what I wanted to cover. Now, this is similar to stage analysis, stage 2 that I covered. You can also watch this video if you want. But today the focus is going to be on what is the trend template Mark Minerveni uses. Now before this, in case you did like my analysis of the past videos, and if you want to learn something, do comment in the section, in the video comments, and I will respond to you, and I will also try to answer your questions. Okay, so the Mark Minerveni's trend template is pretty straightforward, right? It uses moving averages just to see if the stock is in a very strong uptrend. Now this screener is purely just for trading, and it's purely to pick stocks. It's not way to write trends, all of that. It's purely to select stocks. Now make it very clear here. Okay, and the stocks must meet this criteria. If you were to follow the trend template by Mark Minerveni, the stock must meet this criteria. It doesn't matter if the fundamentals are good, the stock must meet these criteria that we're going to discuss. Now, this screener will ensure you avoid investing in stocks that are in downtrend or in sideways, which is also very important. Otherwise, there's always an opportunity cost, especially if the stock is in downtrend or in sideways, right? And I'm going to discuss 8 criteria over here. Out of these 8, the last criteria is not really applicable for Indian markets because we do not have the IBD RS ranking for the Indian markets. Okay, so let's look at the 8 set of rules. The first rule is the stock should be above the 150-day moving average and the 200-day moving average. The stock price should be above both the moving averages. Now, these 2 moving averages are long-term moving averages. They are also 30-week moving average, 40-week moving average. So the stock needs to be above these 2. That's the most important point. Now, wait until the end of this video because I'm also going to show you the indicator you have to use in TradingView, which can tell you if the stock is meeting this criteria. Okay. Next, the stock's 150-day moving average should be above the 200-day moving average. It's pretty straightforward. The 200-day moving average should be up at least for 1 month, right? And ideally, it should be up for 4 to 5 months minimum. Now, that's the third criteria, which means the 200-day moving average should be trending up and should be up at least for 1 month. If it's up for 4 to 5 months, it's very good. Okay, next, 50-day moving average should be above the 150-day and 200-day moving average. Now, 50-day moving average is a medium-term moving average. Now, the 10 and 20-day moving average are short-term moving averages. 50-day moving average is medium term, and 150 and 200 are long-term moving average. Now, this is something that you have to know, right? So here, the 50-day moving average should be above the 150 and 200-day moving averages, and the current price should be above the 50-day moving average. Now, in short, the current price should be above all moving averages. That's very simple, and that's a strict rule. And then the current price is at least 30% above its 52-week low. The more, the better. Which means if the stock dropped all the way down, and then if the stock has recovered, it should recover at least 30% from the lows, from the bottom, right? And the current price is within at least 25% of its 52-week high. Now, this is also very, very important. If it is closer to all-time high, it's even much better. Now, remember, the more a stock is into all-time high, which means there's no resistance whatsoever on the stock and keep heading higher. And the last rule, which is not applicable for our Indian markets, is relative strength should be greater than 70. Now, you can simply ignore this point and you can move forward if you want to. But if you still want to apply this, you can just use my relative strength indicator that I have. Do check out the video on relative strength. There's a video called Copy My Trading Setup on my channel. Do check it out. So now, the indicator first that you have to use is this indicator in TradingView. I'll shortly go to TradingView and I'll show you what indicator you have to use. And if you want any screener, just search for Mark Minerveni Trend Template Screener. And charting, there are many screeners, just see if the conditions satisfy. I am not a fan, or at least I don't follow this trend template. I have my own set of rules, so I do not have a screener yet. And I am not planning to build one anytime soon. Maybe if I have a lot of comments in the comment section asking for it, maybe I'll try to build one, but it is necessary to have a lot of comments for me to build a screener. Okay, so let's move forward to TradingView and see how TradingView template looks. Now, I've already added this template here so that I can show you nicely. So I've prepared a template for based on Mark Minerveni template here, and if you see, I've saved it here. So I'll tell you how to create this. So it's simple. What you have to do is you have to add 3 moving averages. So you can go here and choose moving averages. You can choose exponential, or you can choose anything you want. You can add them if you want, and then you go here and you have to have 50 as one of the indicators, 50 moving average. Then you go here, you had 150 as a moving average. Now you can keep other settings as it is. You don't have to really change them. And then you go here, add 200. So 50, 100, and 150 and 200 moving averages. And then you search for the indicator, which is the trend template here in TradingView, and you will find this TWP Mark Minerveni trend template criteria. Now you can also use the one above, but I found this one much better. This is a community script. I've not built my own script here. So you can close this, and then you can plot and you can see the indicators. Right now, I've set the green indicator as the 50, the red is the 150, and sorry, the black is the 150. Red is 150 and black is the 250. Right, 50, 150, and 200. Now here, this is the indicator that I chose from here. This is Mark Minerveni trend template criteria, and here you have a lot of green signals. Now here, all the 8 criteria are listed here, and if all 8 criteria are met, then the template will show a green circle here, right? And remember here, the 8th criteria, which is IBD-RS ranking, here they just assumed it will be greater than 70. So we do not have that for the Indian markets. Very straightforward. Now, in case you want to change the conditions to simple moving average, exponential moving, you can do that. So here you can click on this and you can change it to a simple moving average or exponential. Now, by default, keep it to the exponential moving average, or if you want, you can also use simple moving average. Now, remember, it's not a major difference. Now, how do you apply this to your stocks? Now, when a stock is meeting all conditions, which means the stock is in a very clear uptrend. Now, what you could do is you can try to find a good entry point for the stock and invest in the stock. Now, for example, in this case, ISGEC is finally here. Probably you could have bought this breakout over here around this point, and you could have invested in the stock with this stop loss at this low, right? That's one of the ways to do it, right? Now, let's take example of Credit Access, which is one of the stocks I am holding at least for now. And here, if you see again, Credit Access, meets all the criteria over here, right? And the stock actually has been in a very strong uptrend. Now, what you have to do is, whenever you're investing in a stock, you could add this as a rule. I do not follow this. I'll make it very clear. But you could follow this and say, okay, if all the stocks are meeting this criteria, then I will wait for a swing to be formed. For example, let's say at this point, the stock had a swing breakout over here, clean continuation breakout. You could have bought the stock here with the stop loss at this point, right? Now, that's one of the ways to do it. Now, that's a short thing that I wanted to show you today. So this is the indicator which you could use, and if you have any questions, you can contact the script writer. I am not the script writer here, and you can tell me how this works. I'll just show you one example which for example, it doesn't work. For example, take Nifty 50 and you will see red points over here. Now here, first of all, the criteria is not met. Why? Because here one of the criteria is in red. because the price is not at least 25% above the 52-week low. 52-week low was somewhere around here. The price is definitely not 25% up. So yeah, that's one of the ways you can know if a stock is not meeting the criteria of the trend template here. Now, in case you don't want all this, you just want this one single, you can go here and you can just say hide individual conditions, and you will just see one line over here. That's also one of the ways to just look at it in case you want to just ignore all the noise and just focus on yes or no, right? So that's what I wanted to share today, the Mark Minerveni trend template criteria. And if you did like my video, don't forget to subscribe to my channel and like this video as well. Otherwise, I'm going to leave you here. Take care, stay safe, and trade safe. Until I see you in another video. Bye bye.